On today's show, CNBC and others reporting a mysterious surge in $100 bills. How do you get that money in your wallet? Hopefully we'll cover that. Maybe not. But then second, and I think this one's really cool, gig work split evenly among the sexes. You know that wage gap we hear a lot about? Apparently that doesn't exist when it comes to the gig economy. That and much more all on today's Money in the Morning. Live from my mom's Half Finished Basement in Detroit, Michigan. Hey there, stackers. I'm Joe Saul-Sehy, Average Joe Money on Twitter. Welcome to the show where we not only read the headlines like they do on some other, lesser podcasts, but we also talk about what that means to your wallet, to your saving, to your ability to make money. And we don't just stop there. Oh no. We then combine the two and give you a big idea that you can take home and use for the rest of your workday. Money in the Morning is brought to you by Emperor Investments, automated investing refined. Emperor offers 100% equity portfolios designed to earn dividends while you enjoy your life. For 6 months, 100% free. That's what we negotiated for you. 6 months, 100% free. Head to emperorinvest.com/MITM. That's emperorinvest.com/MITM. Hey kids, we got a great show for you today. 2 great headlines that go great together. So Laura, why don't you fire this thing up for us?
And now, your first Money in the Morning headline.
Our first piece comes to us from CNBC. How about this? $100 bills showing up all over the place. You get $100. You get $100. Wouldn't that be great? Be fantastic. Well, let's see what's going on here. This piece written by Kate Rooney. There's been a mysterious surge in $100 bills in circulation, possibly linked to global corruption. Rebecca, by the way, who listens to the show, sent this to us. And if you have a headline you'd like us to discuss, send those to me, joe@stackingbenjamins.com, and we're happy to do it. All right, let's dive in, kids. The amount of $100 bills in circulation is surging, and that's leaving some economists scratching their heads. The number of outstanding U.S. $100 bills has doubled since the financial crisis, with more than 12 billion of them across the world, according to the latest data from the Federal Reserve. C-notes have passed $1 bills in circulation. Deutsche Bank chief international economist Torsten Slok said in a note to clients this week. Wait a minute. There are more $100 bills in circulation than there are $1 bills. It's pretty interesting. Generally, economists believe the surge is related to people around the world wanting to hoard cash, a similar force that's driven the interest in cryptocurrencies. High denomination, high value currency notes have historically been a preferred form of payment for criminals, given the anonymity, lack of transaction record, and relative ease with which they can be brought across borders. Nicholas Colas, co-founder of DataTrek Research, has been down the rabbit hole of a topic for more than a decade. He said the growth in $100 bills in circulation is a signal the world's relying on them as a store of value and still using them for international crime. Quote, "It has nothing to do with the U.S. economy and nothing to do with interest rates," said Colas. "There's certainly enough evidence to say it's an enabler of corruption, but it's also a way for people to keep assets outside of the financial system, albeit in a kind of bulky way." Number of $100 bills abroad began surging after the Gulf War and U.S. invasion of Afghanistan, according to Colas. Part of stabilizing the region meant replacing local currencies with something, and that something was U.S. dollar. Those larger bills also have a longer shelf life than the other forms of U.S. cash. Still, Deutsche Bank's Slot said multiple factors could explain the increase in C-notes. Could be driven by a global fear of negative interest rates in Europe and Japan, or it could be a savings vehicle for U.S. households worried about another financial crisis, or it could be driven by more demand from the global underground economy, Slok said. Then it goes on to say that 80% of these pieces, of these bills, are overseas. You know what's funny is that let's dive into this a little bit. I think it's above my pay grade a little bit to talk about why there's so many $100 bills out there. Certainly, corruption is a good answer. Hoarding, though, is the one that I want to get into, because you don't just see this internationally with crime. You see this in the United States. You see this with wealthy people. You see it with poor people. You see it with people that have any type of fear. We joke all the time on my other podcast, Stacking Benjamins, about Len Penzo, our Friday contributor, hoarding gold in his doomsday bunker. And that is just a joke. And the reason it's a joke, and the reason why we think it's a funny joke, is because of the fact that hoarding money, frankly, is a horrible idea. And by the way, not only is hoarding money a bad idea, hoarding money and telling other people about it, even worse idea. You see, if you study the news as much as I do, all the time, elderly people hoarding cash, younger relatives robbing these elderly people. And the elderly people are doing it because they don't trust the banking system. And they tell a trusted person that the money's there, or somebody suspects that the money's there, and something bad happens. I mean, there's even one of my favorite TV shows is a show called Arrested Development. And on Arrested Development, dad who's in jail says there's money in the banana stand. And the family, Jason Bateman and his son, think that it's a euphemism that you can always make money by working the banana stand. So they burn the banana stand down, and it turns out that Jason Bateman's dad has lined the walls of the banana stand with cash that he's been, that I think he's been hiding from the government, embezzling something. But the point is, you see money go up in smoke. You see, there was a recent story about an ATM machine where all the money inside of it got burned by the criminals trying to take the money out. Hoarding cash is a horrible, absolutely horrible thing. And there's so many things that can go wrong. Do not carry tons of cash around. Just an absolutely bad idea. Let's say hi to our friends hanging out with us on Facebook. We do this live in front of a Facebook audience. If you want to join us, we come on at random times. My partner here, Bobby Rebell, and I. And it's at facebook.com/iStackBenjamins. I love Eric's comment here. He said, what would Marie Kondo say about hoarding money? Imagine, Eric, if you had to put your money in a big stack in your living room, like she says to do with clothing. You put your money in this big stack, and it's and then you have to decide whether it sparks joy or not. I'm sure every single one of those bills would spark joy. But as a former financial advisor, it sparks way, way, way more joy if you keep that cash in a bank account with FDIC insurance behind it, so you don't have to worry about all the things that could go wrong while it's on your living room floor or under a mattress. I remember when I was in college, I went to the college my cousin was at, and of course, being in college, imbibed too much alcohol, hanging out with a bunch of his fraternity brothers. The next morning, my wallet was empty, absolutely empty. Somebody had gone through my clothes and taken all my cash out of my wallet. Had I not brought a ton of cash, I'd just gotten paid. I converted it all to cash, took it with me. Shame on me. Didn't stop at the bank. Took the cash with me. Fell asleep. Woke up the next morning. Cash all gone. Not great. Laura says my Nana's funeral was paid for by the cash she hoarded. Oh, that's absolutely horrible. I mean, on one end, an all cash funeral, do you get a discount? I mean, I'm not trying to be flippant about Nana's funeral, but you know, they say there's like a cash discount for different things. But yeah, hoarding cash. Kathy says, I definitely have trust issues with banks and other money-related things. And what's funny is that's a lot of people, Kathy. They have trust issues with banks. And the problem with that, The big problem is you think about what is riskier, having your money in a bank where there's laws and FDIC insurance around it versus all the things that could go wrong when it's hidden under the bed or in a drawer in your house. I have so many more issues with that than I do with banks. It's so absolutely difficult. We also got to say hi to our other friends here. Our friend Amika in Cincinnati is here. Mitchell is here today. Glad you're with us, Mitchell. Mitchell said he's going to be here for 10 minutes. It better be good. Man, I hope we're bringing it today, Mitchell. We don't want to lose the listener. Mike is here. And Mike, my buddy Mike, is here. Who I'm still trying to get to try to play Crackdown on the Xbox with me. So, Mike, whenever you're ready to come over to the dark side, that is the new Microsoft game Crackdown, just let me know. I'm here waiting. I'll stop this recording right now. No, I won't do that. Let's go on to our second piece. Excuse me. You can tell we do this live because I can't seem to be able to put a sentence together today. This second piece comes to us from the Orange County Register. I think this is some really good news here. By the way, our takeaway from that first one, don't hoard your cash. Please don't hoard cash. Even if it'll pay for your funeral later, don't hoard cash. The gig economy, shrinking the pay gap. This is a good news thing. This comes to us from the Orange County Register. Bobby Rebell, who is my partner here on this show, found this piece written by Kevin Smith. It says a growing number of Americans are finding work in the nation's gig economy, and it's become something of an equal opportunity employer, at least gender-wise. New report from Wonolo.com, an online startup that connects underemployed people with temporary work, shows a 50-50 split between men and women gig workers who use its service. The study also reveals a narrow pay gap, with women earning 98% of the hourly pay their male counterparts earn. That 2% gap falls well short of the 20% gap that exists across the nation's entire economy, according to research from the American Association of University Women. The average pay for a male Wonolo worker in the gig economy is $14.69 an hour. Women close behind at $14.38 an hour, the company reports. The figures, based on research involving 300,000 Wonolo users and data from companies scattered around the U.S., is largely reflective of the economy as a whole, says Beatrix Payne, the company's vice president of strategy and finance. But when it comes to pay equity, Wonolo might have a leg up on its competitors. It works like this. Once a worker is vetted and approved, they have access to every job on the platform and can choose to accept any job they want. We've also found that in some industries, like delivering and merchandising, women are actually earning more, Payne said. In fact, Wonolo figures show that female delivery drivers average 7 cents more per hour than male drivers. Wonder why that is. By the way, while women who work in merchandising average 40 cents more per hour. Figures show that 78% of Wonolo's, 78,000 rather, of Wonolo's 300,000 users are in Southern California. So those may skew this data slightly. Delivery jobs, by the way, pay the most on this platform. In Southern California, the average age of a Wonolo gig worker is 31, and the most popular jobs are in customer service, manufacturing, and food production. The highest pay is delivery at $20.53 an hour. Customer service is second, $15.89 an hour. And event staff is at $14.89 an hour. This piece at the end, I really want to go into because, and I'm going to skip down here a little bit. Many people pursue gig work because it's flexible and allows them to work when or where they want. But it doesn't always pan out the way they envision. Drivers for Uber, Lyft, and other ride-sharing services have become a common sight on Southern California streets and freeways. And although the job is typically promoted as an easy and flexible way to earn extra cash, a 2018 study from UCLA reveals that many drivers are working extra hours for longer durations while struggling to stay afloat. It's funny because people talk about the gig economy and about making more money. And yet I think many people also take the first or the easy gig job instead of actually looking around for the one that pays, and don't really look at their expenses. In fact, we had a similar story on a few weeks ago about how many people are driving, and the cost of actually driving versus what you're making isn't as big as you think it is. So the amount of money that you're actually making when you look at your out-of-pocket expenses is much, much narrower than it could be. So let's talk here about the gig economy and the shrinking pay gap. I like this idea that the gig economy is an economy where you sign up like on Uber, and whether you're a man or a woman or whatever background you have, all of that largely is irrelevant. And because of that, you're able to score a job doing one of these tasks. Airbnb, as an example, Lyft, Uber, TaskRabbit, all of these narrowing the platform. What's interesting, though, about the gig economy is that it makes us need to be business people, doesn't it? There really is a whole different set of skills in running a business. And as I mentioned before, when people see that something pays $15 up top, that's not what it costs to actually run your business. And now you have a lot of factors on you that you didn't have before. Like as an example, you are paying all of your own taxes, where if you work for somebody else on a W-2, your employer is paying part of those taxes. So your tax rate then is a little higher. Now that's offset by expenses that you can claim. But how many people starting out in the gig economy actually know what expenses they can claim? I didn't, and I wasn't part of the gig economy. I just went to work for myself as a financial advisor, actually worked with a firm, but I was an independent contractor, and I've told this story elsewhere, but I had no idea how taxes worked when I started out. And what was bad about that was I ended up then owing a bunch of money to the IRS that I didn't really owe. Like once I figured it out a few years later, I didn't owe any of that money, and it was way too late. So if you're going to get involved in the gig economy, which I like, and I love the fact that it's narrowed the pay gap, I don't like the fact that there's a lot of people now paying their own taxes, running a business, who know nothing about running a business. A fantastic primer on business. One of my favorite books on business, if not my favorite book on business, is a book called The E-Myth. And I would definitely read The E-Myth if you're interested in that. Let's say hi, by the way, to people who want to create their own paycheck. People thinking about the gig economy out there. Lori's here. Hey, Lori. Lori says it's shrinking the pay gap, but is the gig economy isolating people? Historically, we've gotten so much of our tribe and sense of belonging from the places where we work. It's funny, isn't it? Lori, to your point, when we talk about who we are, it's often encompassed in what we do and the friends that we hang out with. I mean, my partner on the Stacking Benjamin show was OG, is a guy that I knew from work. And it's funny, if I'm driving Uber all day, I'm meeting lots of different people, but I'm meeting them for what, 20 minutes while I'm driving them to the airport or to their next dinner party. And they're so focused on either each other, if there's multiple people, or they're focused on the thing they're going to. How am I developing a lasting relationship? It's interesting. I hadn't thought about that. Kathy says women are making more than men because they're better at directions and don't get lost, so we can deliver more per hour. Funny story in our family. My spouse, Cheryl, is absolutely brilliant, except when it comes to directions. And she already knows, and we have a 25-year running joke in our family, that if Cheryl thinks something is in the right, she can very safely turn left and she will find whatever it is she's looking for super safely. And it's a joke because it's so true. Every time Cheryl says, hey, I think it's to the right, it's usually the left. In fact, we just got home from meeting fans of the Stacking Benjamin show in Seattle and in San Francisco. By the way, thanks to everybody who came out for those. That was so much fun. But Cheryl came later. And so she had parked the car at the Detroit airport, immediately goes into the parking lot and takes a left. And silly me, I absolutely followed her went down, I'm thinking 150 yards, maybe 200 yards before she thought, well, maybe we're going the wrong way, and went exactly in the opposite direction and found the car very quickly. So I like the premise, but the stereotype maybe doesn't hold, Kathy. We got James here. James says, I've worked from home now for 3.5 years. It's definitely isolating compared to working from an office. And maybe that's why some of these online communities are so much more important than they used to be. Even though what's funny is that when it comes to online communities, I mean, there's all these discussions that, yes, we're communicating more, but are we really making friends? Like, James has been hanging out with us for a long time on the Stacking Benjamins basement and hanging out here and chatting. And I like what James adds to our community. But James and I ever, go out to dinner together? Not yet. Just saying, James, I'm available if you want to put the invitation out there. That's why I do this, so I can get free dinners from people like James. Merlis is here. Hey, Merlis says, as being a parent in regards is an effector of the pay gap, perhaps the highly flexible working hours, the gig economy decreases that effect. I think not only that, I think that is true. I also think, though, what's true is that these are you do not have a hiring manager making a decision. You have an algorithm saying we need X number of drivers. And when you go in and put in your information, company like Uber, it doesn't matter. You're applying online. You're being approved online. It's all automated. So good stuff there. Speaking of good stuff, we've got a very good big idea coming up where we're going to try to tie these together in a second. How are we going to tie the gig economy shrinking the pay gap to more $100 bills in circulation? And it might be fraud or corruption that's causing it. Oh, just you wait. Because first I want to talk a little bit about our sponsor for today's show, Emperor Investments. And what I love about Emperor Investments, when I first heard about them, I'd heard that this is a company that is another robo-advisor. And I thought, boy, what we need is another robo-advisor. That was sarcasm, by the way. And then I found out how Emperor Investments works, and my opinion did a 180. And the reason is, instead of just some manager out there buying a bunch of index funds like I can do myself and putting them in an account like I can do myself and then charging me an additional fee for that, instead, I have an investment philosophy that's much more like Warren Buffett's deep value philosophy and has a track record that's also fantastic. I also have individual stocks, which means that now with fractional shares of individual stocks, I can now have my own portfolio based on dividends, go about doing my own thing, and when you compare apples to apples, have a fee that actually finally makes sense for the service that they're doing for me. Love it. Went from, another one, to absolutely loving what they do at Emperor Investments. Money in the Morning is brought to you by Emperor Investments. Automated investing refined. We like them because when you think about investing, you should always ask yourself about the risk you're taking. Emperor's investment philosophy prioritizes consistency without sacrificing returns. Head to, what is our link for Emperor Investments? It's emperorinvest.com/MITM. And by the way, emperorinvest.com/MITM. Don't go to Emperor Investments. That's a different website. emperorinvest.com/MITM. And when you invest with Emperor Investments, what you'll see is you get 6 months free also. Not only are the fees low, but no fee for the first 6 months to try it out. And I think you'll see what I see. Good stuff. All right. We've got Kimberly weighing in on what our big idea is today. She says that I'm still saying that not paying gig taxes is leading to those extra Benjamins. She said, I saw you skip my comment that this must be what Doug feels like when he has a brilliant idea. Kimberly's comment is don't pay any taxes on gig jobs. Maybe. Probably not. But maybe. Let's look for another one here. I don't see any other guesses as to today. So let's get to it. Everybody listening to the audio of this going, hey, let's get to it. We talk a lot about equal opportunities. We talk about it here. We talk about it on the Stacking Benjamin show. And we talk about the fact that clearly the roadmap is not, it isn't a level playing field for everyone. And I think it's okay. I don't think it's okay. But I think that it's okay when you think about it this way. And I'm trying to remember the name of the guest that said this. Knowing that there is a playing field that's not level, going in with that is not an excuse to do nothing. You still have to do something. You have to know that the playing field's not level and still go in and do something. And the playing field is leveled out by and large, I believe, when it comes to the gig economy. But we still have to do something. And what's cool is, and this is the cool part. That's the technical term, the cool part, is that once you go from you working to your money working, there's complete equal opportunity. Now, not between the uber wealthy and you and I. Uber wealthy still are going to get access to some investments that you and I won't get access to. But when it comes to the majority of people, what you do with a dollar once it enters your hands is completely up to you. And now we're all on a level playing field. Now we get to decide what we do with that money. Do we put it under our bed? Do we put it in a drawer? Do we hoard the cash? Do we tell stories about having our wallet stolen? Or do we put it in an FDIC insured account? Do we, when we run a company, do we actually look at the rules of how tax deductions work and business expenses work and make that company work for us? Or do we just go drive a car for a while and not realize how it works? Our money has equal opportunity. And it's a powerful thing because I remember reading when I first read Rich Dad, Poor Dad by Robert Kiyosaki and Sharon Lechter. When I first read that book, I remember this powerful thing, thinking about how tax brackets are not even for people. And so people that are in higher tax brackets pay much more tax on income than people in low tax brackets. And we counter that with this equal opportunity we talk about between men and women and people with different backgrounds. And the fact that they're clearly, when you look at statistics, is not equal opportunity. And you take all of that inequality when you make money, but you have this person that you're building next to you. And like you go to lunch with your lunch pail every day. And I love this analogy from this book. You go to lunch with that lunch pail. Your money also goes to work with the lunch pail. And the quicker you can make that very tax advantaged person bring in more money than you, the quicker you're going to have financial independence. Your money has equal opportunity. I think it's a great, great place to leave this. Super powerful message, and not one that I think enough people get. So, hey, thanks for hanging out with us, everybody on Facebook. Thank you, everybody listening at home. And by the way, thank you for the reviews. People have left a review of this show that lets people know exactly what they're getting into, something much different than a lot of podcasts out there where we do it live in front of a Facebook audience, and you get something new ripped directly from the headlines every time we record. So on behalf of Bobby, you'll see her again back here next time. I'm Joe Saul-Sehy. Go stack some Benjamins. Bye-bye.
This show is created by Joe Saul-Sehy, hosted and produced by Bobby Rebell and Joe Saul-Sehy, is engineered by Caden Thompson, and all put together by a pack of well-trained ferrets down here in Joe's mom's basement. You'll find Bobby at the Financial Grown-Up Podcast and Joe at the Stacking Benjamin Show. Go say hi to them there, too. Online, visit us on Twitter at Average Joe Money and at Bobby Rebell, or come join a live recording at our Facebook page. That's facebook.com/iStackBenjamins. I know you already know this too, but Money in the Morning is for entertainment purposes only. You should not act on anything recommended by a bunch of entertainers in a basement or even a Manhattan kitchen without first consulting your financial advisor. And second, dude, have your head examined. Have headlines you'd like us to discuss? Send them to joe@stackingbenjamins.com or put them on our Stacking Benjamins closed Facebook group. This show is a collaboration of Stacking Benjamins LLC and BRK Media LLC. Copyright 2019. All rights reserved. I'm Joe's mom's neighbor Doug, and I reserve the right to always say, we'll see you next time back here on Money in the Morning.